Good day, everyone. This is Patrick from EasyFX Code Trading System, and it's Saturday, the 21st of January, 2023. And this is the weekly technical analysis for the Euro, the cable, and the Aussie dollar for the fourth week of January. And let's begin with Euro. And you can see how tight the range was for last week. We expand this out, and it's only just about 100 pips, just over 100 pips for the whole week. So that's a very tight range for the week. If we take a look at the weekly time frame, I can see how just a small spinning top for the week. We'll see if this week, as we get closer towards the February 1st FOMC meeting, whether it's going to rise first and retest test the next resistance area at the 109.40 area near this swing high at the 162 pip extension of this swing move up, or whether it's going to pull back first to retest the 138 pip extension, and that's at the 107.70 area at the support zone. Let's go back down to the daily, and the only volatility created was on the Wednesday. That was mainly due to the Bank of Japan, which caused this volatility. And we zoom into the 4-hour time frame, or even the 1 hour. This was basically from this area here. That was on the Wednesday. So it went up first and then retraced the move back down, and then slowly crept up again towards the end of the week. And you'll see the reaction or price action of the dollar against Japanese yen in my other video, so do check that one. And I'll mention that also as it relates to the US dollar index. All right, so this week there's only minor news for the Eurozone, with the flash PMIs going across all the major economies. Support is still, interim support is still at the 107 here, and the immediate support is right at the 138 pip extension. Resistance is still up there at the 162. And of course, the major one is going to be at the 110 area. Next major zone of support way down at the 105. That's where it started its recent bullish move. So let's see if next week we can break out of this box and punch through to test the resistance, or whether it's going to pull back lower before it starts to gain some traction. So the immediate support is definitely going to be at the 107. And the target area is just going to be at 109, just above the 109. At 162 pip is at the 109.45. Okay, so we'll contrast this with the US dollar index to see whether that's also reflected in the inverse correlation with the euro. And here's the US dollar index, the DXY. And you can see it's also trading in a narrow range for last week, apart from the long wick below. Otherwise, it's also in just wider than a 100 pip range. And that was Wednesday, where the US dollar yen caused some volatility due to the Bank of Japan's policy, but there was no change. The policy announcement, no change since the last one, where they made some tweaks in their yield range. That was in December, but this time everyone was expecting some further changes, but they did not make any, and that created some volatility here with some initial move down. This was the initial move down, and then went all the way down to almost test the 101, just shy of the 101, before it managed to recover back to the 138 pip extension zone, and just oscillating around that area for the rest of the week. So all just waiting and pending further news for the Federal Reserve meeting on 1st of February. Go back to the daily time frame, and this week there's only some key news, but the key one will be the Friday US PC price index, which will give further indication of inflation reading. Interim support is still at the 101, with the major one right below that at the 100. And the interim resistance at the 103. Didn't quite get there this week. And operating in the lower range below the 138 pip extension of this swing move down. It really needs to break out above the 103 before it can try to make a serious recovery. And 105 will be the main trigger of the change into a more bullish mode. All right, so we'll see this week if there's any further breakthrough in this consolidation area for both euro and other major pairs, as well as the US dollar index. But for now, it's very, very tight and low volatility for the week. We'll see if that changes next week. All right, so let's move back to the other major pairs. Let's move on to the cable. And the cable did attempt to creep up higher from the previous week, and did manage to break through this minor resistance here, and attempting to retest. They tried to retest this recent swing high at the 124.46 area. So creeping up to this resistance zone. Put this between just below the 125 as well, a critical round figure. Let's remove this. And support is still holding at the 78.6 retracement, just at the confluence with the daily 200 EMA. And key support is at the 62 pip or the 38 pip retracement of this swing move up. So let's see if there's any further bullish momentum for next week, and whether it's able to test the 125, and whether it's even going to break through. But this is going to be a critical psychological barrier, or whether it's just going to also consolidate as with the other pairs. So it depends on how the US dollar reacts as well for next week. And there's also only minor news for the UK, just the flash PMIs. So let's see if there's any strong demand for pound next week. Otherwise, it could just settle down and also consolidate. All right. On the weekly time frame, it's a bullish close, and that's why we've got to see whether there's any momentum to push it through the 125. Otherwise, it could just also pull back and retrace back into the weekly 55 EMA. Okay, so let's move on to the Aussie dollar, where it did also try to push out higher. That was also the reaction to the Bank of Japan's announcement, and basically no change in their policy, but created volatility here. And on the 4-hour time frame, it did creep up higher, but then later at night it just fell back through after testing this upper trend line here. So it was rejected. It did climb up to high of 70.63 area before being sold off, and then continued lower into the 69 area before Friday. It managed to recover somewhat. And for the week, it closed as a doji after testing the upper trend line, pulling back lower to the range of last week or the previous week, and then recovering back to close at the open again. So let's see this week whether it's going to try to continue to push through the 70, or whether it's just going to retrace back lower. And the CPI figure will create some volatility on Wednesday. Let's go back to the daily time frame. So support zone, interim support is still going to be at this swing high at the 68 round figure. For the moment, the 69 round figure is holding quite well. So the 67 maybe, or rather the 68 level could be quite safe here. And the 70 is still proving to be a strong psychological barrier. Okay. So let's see for next week whether it's going to break through higher or just consolidate with these strong barriers here. And for the moment, it's still finding a strong demand and support, so that's likely going to hold. Could also move this support, intermediate support to the daily 200 EMA area. Okay, so do check out my other videos on spot gold and dollar yen, and have a safe week and a good trading week, and cheers for now.